Good afternoon. My name is Todd Caruso. I lead our retail agency business with CBRE, and here we are at the 2013 RECon convention. I've got a very special guest in Chris Roscoe. Chris is our retail sector head for Clarion Partners and is in that role for the Americas. Chris, I just wanted to ask you a few questions about Clarion. If you could give me a sense for your history with Clarion, when you started with the company, maybe give me a sense for the team that you manage and the mission of that team.
Sure. I joined Clarion in 2004 when it was ING Clarion. It was involved with their international retail group. We went private approximately 2 years ago. We currently have 138 assets across the United States, Mexico, and Brazil, about 45 million square feet of GLA. And we have 5 asset management teams. And the 5 asset management teams are in the United States, with myself concentrating on Mexico.
And Chris, you mentioned that you were in Brazil, so that's an emerging market, obviously, that many people are talking about. When did you enter Brazil?
We entered Brazil about 5 years ago. Our first investment in Brazil was industrial, and we are currently looking at retail opportunities through our office in Sao Paulo.
Okay, great. If I were to look at your portfolio, the majority of that being in the United States, give me a sense for where those properties are located from a city standpoint, and then if you could maybe speak to the formats, whether the majority of those are neighborhood shopping centers, community centers, urban, suburban.
We are primarily involved in coastal markets and up and down the western seaboard and up and down the eastern seaboard. In South Florida, we are in the Midwest, we are in the Southwest, and we are in Mexico with 16 assets and 2 joint ventures down there. Our assets range from neighborhood community shopping centers, power centers, lifestyles, all the way up to malls and super regional malls.
So you entered the urban space probably before many institutions did. I think there's a lot of other there's many other peers that probably would love to be in the position that you're in. How do you view the urban space today? It certainly is a heck of a lot more competitive, I would imagine.
It is very competitive, and it is a focus of ours, primarily because some of the urban infill that we've had in our portfolio have done the best performance-wise over time, especially in infill areas. So our focus is definitely there. We're also looking into secondary and tertiary markets for core assets, as well as value-add opportunistic opportunities. We were primarily a core buyer in primary markets, coastal primary markets, with the competitiveness going on with capital as well as financing, cap rates. We have great cap rate compression again. It's been very difficult to enter those markets, so it's forcing a lot of us to go outside of our boundaries into the secondary and tertiary where we are, and are doing very well. And we're also looking at alternative investments along with all the rest of us, and that is in student housing, senior housing, medical office, et cetera. So it's a pretty dynamic time.
Great. Chris, we recently received some great news on the Consumer Confidence Index. I think I read recently that we are now at a 7-year high on that index. Just curious, when you are with your associates, what is Clarion's crystal ball? How do you see the economy as it affects the real estate industry today?
Well, we're in a recovery. I wouldn't say it's an expansion yet. I don't have the crystal ball as to what quartile we are in that recovery. But in most of our markets, our rent levels are back to where they were pre-recession. And we have a few where we're struggling a little bit, but we're still seeing some positive movement, which is good. And our core assets are about 95% leased overall, the portfolio, including our malls. We're up to about 97% leased.
Incredible. So if I were to look at your portfolio today and just take a snapshot, maybe gross rent of your entire portfolio, and compare that to pre-recession, where are we in that cycle?
We're getting close. We're not quite there yet. We're probably off by maybe 10 to 15%.
Okay.
And that's on average. But we are coming back. What's interesting in this environment, as we all know, is there's virtually a lack of development going forward for the foreseeable future. And of the development that is happening a lot in the outlet center space.
Right.
And so it's just pretty interesting. So with the lack of development, you would think that there's a lot more opportunities for retailers to be selective. But at the same time, a lot of them are pulling back a bit on their expansion plans with their new operating efficiencies. So we need to make sure that our assets are effectively the best of class to be competitive and be able to capture this growth.
And where you did have some fallout from some of the mid-sized boxes or larger boxes, are there any categories that came in that ranked up high as replacement tenants that come to mind?
Definitely. That's a great question because we have existing power centers, which you would call a little bit older, so some pretty big space. And we're getting residual space back as some of these tenants are downsizing in the neighborhood of 15 to 20%. And the residual space downsizing, that kind of space really doesn't lead to power type tenants.
Right.
And so we're looking at food, we're looking at services, we're looking at some ready to wear. What we're finding out is that we're able to fill this residual space relatively quickly, and this power center of yesterday becomes a little bit more of a hybrid. And so we've been doing pretty well, and we're actually getting a little bit more cross-shopping than you typically would out of a power center format.
Going back to your acquisition comments, sweet spot today, we've got a big territory that you cover. Do you want to maybe identify a couple of cities that are of interest to you and whether you would pursue those markets from a suburban standpoint or urban, from an acquisition standpoint?
The markets that I discussed being the West Coast, north to south, and East Coast, north to south. Really all the food groups, Todd. I mean, we would be looking at neighborhood community. We're definitely going after the dominant market anchor if we're going after the neighborhood shopping centers. We have done some regional grocers with some high dollars per square foot in secondary and tertiary markets. We're also looking at community centers. We're looking at power centers, but if it's an older power center, the first question we're going to ask is it right-sized? And if it's not, then we need to figure that out. We need to figure out also the length of term that we have. It's going to be interesting to see as new power centers develop as to how they develop, as far as square footage, et cetera. And we're also looking at malls and super regional malls. So Todd, really, it's the scope from neighborhood on the small side to super regionals on the large side.
We've got a great contingency here from Canada. Do you have a presence in Canada?
We do not currently have a presence in Canada, and we've been thinking about it. We've been talking about it internally.
So you're here with your team, and I presume you're here for the long haul through Wednesday.
We are here.
How do you come and work a convention like this?
Very carefully. We have 5 asset management teams. We're out here. We're meeting with the people that we do business with. We don't do any direct management and leasing. So it's an opportunity for us to redefine our strategies and to meet with the people that make us successful.
Well, on behalf of CBRE, I'd like to thank Chris Roscoe. He's a wonderful client, and we really appreciate your time. And your
appreciate the time. Thank you very much.